Welcome back, everybody. Carl Keister here at Clear Surf Financial Education. So today I wanted to do a video. I'm just looking here over the weekend and I'm noticing there's a lot going on. There's also an awful lot of chatter on the Wall Street bets about what happened last week. So let me explain to you in detail what's going on here and what my opinion really is on the whole thing with Reddit, whether they think they're sympathizing with these hedge fund folks or not. I'm going to give you a little bit of a perspective from me of being in the financial services field for 14 years of what my take is on that. So you want to stick around for that. So if you're new, please like and subscribe, hit the notification bell so we can tell you when the next video comes out. Okay, so first, let's look at this. So what happened last week with Gamestop, I've done a couple videos on a squeeze, so I'm not going to go into that, how that happened. You can check out my other videos that I've done in the last week or two as I've been watching GameStop. Also, AMC was a big squeeze. BlackBerry, Bed Bath & Beyond. They even took a retailer up, which I honestly had never heard of before. They took a retailer up from 20 bucks to like 70 in a matter of a couple of days. I think it was Express, which I think was popular, I don't know, a decade ago, but somehow they're still alive in the malls. It just seemed like any stock that had a short interest of 20% or more, that these folks on Reddit were just talking about them and then going after. They took let me just pull it up here. They took it up from Express, I think was a $1 stock or $2 stock. I'm gonna pull it up here to like 10. Closed Friday at $6 a share, up 27%, $1.30. So this stock during the day went anywhere from 5 to 7.50. And yes, this was a $1 stock to start the year. A retailer that's pretty much on the ropes, that people aren't going to the mall. They have been going to the mall for years, and then of course the pandemic just escalated the fact that people really aren't shopping there because how could they? So they didn't have a huge online presence, and this all affected them dramatically. So this stock literally has gone. Let me go to a 5-day chart. Yeah, this was a chart that shows me a little above 250 on Tuesday, 250 to above 1250. And then it fell back down to 5, they pushed it to 6. So why I'm getting at this stock is shorted about 12%. What that means is that 12% of the float, this stock, for example, has almost 65 million shares outstanding. So 12% of that 65 million shares are shorted, meaning that someone has shorted them with the hopes of buying it back lower. Well, when you're at $1, you don't have much more to go. So at that point in time, it's getting extremely greedy for this stock to be that heavily shorted. Even 12% to me seems, it's much higher than usual. Most stocks, if you look at Apple, it might be around 1% short interest, 1 or 2, and that's just people just hedging their bets because eventually Apple does pull back. Apple pulled back this week about $15. So you do get pullbacks where you have an opportunity to make some money on stocks pulling back. Microsoft is another one that pulled back here recently that's been on fire. These stocks have gone just straight up. So when you see a stock like Express that goes from $1 to over $12.50 and then rolls back over, you know something's going on. So GameStop, same thing. So Reddit people are out there, they're following posts out there. If someone mentions an iconic name that maybe they liked years ago, and they're just trying to catch all these hedge funds. But the problem is they're going about this the wrong way, if you ask me. I just read some this weekend that Stephen Cohen, who's a big hedge fund person, he is one of the hedge funds that borrowed money, or lent money, I should say, to Melvin Capital to help bail them out. They were in the hole about $3 billion on the GameStop squeeze. So he had lost some money. They were down about 15%, he said. So that's pretty significant. That's millions of dollars. He lent someone else money that was in a hole even more than that because of the squeeze. But what happened here in the recent days is some of these folks, he's on Twitter because he owns the Mets and likes to talk about baseball and such. Well, some people have gone out there and attacked Stephen Cohen and threatened his family now at this point in time. So this whole mob mentality, I don't have a problem with trying to squeeze shorts that, especially like GameStop was 140% short interest. I don't have a problem with people going after and taking advantage of hedge funds that got way too greedy, way too confident that thing had to keep going down. I don't have a problem with that. But I do have a problem with is when they make it personal and you go after and attack someone and threaten their family. To me, I don't care who you are. That's just over the line. That's just too much. Now let's get back to what I mentioned early on. What do I think? Do I think Robinhood is actually a sympathizer of these? No, I don't. And the reason being is you have to understand, like Robinhood was there so people could buy small fractional shares. You can't buy a share of Amazon if you're new to the game, you have no money. You can't buy a share of Amazon because, let me look it up, even though it went down last week. AMZN, okay, $3,200 a share. So the whole purpose of Robinhood and those type of people that wanted to invest in them was to go out and you can buy a fractional share. If you want Amazon, and it's been going straight up for the last couple of years, you can buy a fractional share. Well, Robinhood, in order to do that, they have to have the money when someone wants to buy this on margin. What that means is, let's say you put, $1,000 in your account and you want to start trading. If you open up a margin account, normally a stock, when you buy a stock and then you sell a stock, it takes 5 days. Traditionally, 5 days for that sale of that money to hit your account so you can use it again. So if you're buying on margin and you sell a stock and you're able to buy a stock a minute later or seconds later, that's only because Robinhood or those brokerage houses have a lot of reserves. They're allowing you to do this. Yes, they charge you interest. That's how they make most of their money nowadays, is they charge you interest. And they also get a piece from the volume that they're pushing through the middleman. So why I'm saying this is, I do think the demand's legitimate. I watched the interview with the CEO, and he said it was basically a money issue. They were trying to protect them from going belly up. And also he knew in the long run, if too many people follow this pattern, which has been going on, is they're gonna be, as musical chairs works, when everybody stops, someone's gonna be out of a chair. But what's gonna happen is eventually all these people keep following it in, there's not gonna be enough buyers where you paid, they're gonna take you out. You're gonna be selling it at a much lower price. So they really need to be careful. And I know a lot of this, I've read a lot of the threads this weekend, and I read over 100 to be honest with you. And the one gentleman that was behind this, I read a little bit more about him too. It turns out he had worked for MassMutual, which I had worked for years ago. But he worked in marketing. He really liked this GameStop position. He's been building positions since last summer of actually 2019. He's been building a position, and then lo and behold, he started all this chatter and getting all this excitement built around it. And he showed a snapshot of his account. I looked at it today. A snapshot of his account out there shows $46 million. $13 million cash he's taken off the table. He's got 50,000 shares option-wise and 50,000 shares of GameStop outright. So that is a huge position. I think each one was like 13, 14 million. So 13 million off the table, another 13 in options, so $27 million more in current profits. And he says he's still in it. And then I watched thread after thread after thread saying basically, if he's still in it, I'm still in it. He's still in it, I'm still in it. I read that 100 times. People kept doing that. But what they don't understand is this guy has pretty much propped his market up, who said he has not been contacted by the SEC. I don't think he's secured his license. I don't think he has anything to worry about there. But what's the difference? I get why these folks are mad, because if hedge fund managers can all go out to dinner in Palm Beach, which right down the road for me, they can go out to dinner and discuss ideas, and they're running billions of dollars. So if they all start buying the same things, isn't that propping up the price? So in a way, I can kind of understand how the small trader feels upset now because they're being limited. I read an article today that Robinhood is restricting. There was 13 stocks initially on Thursday. They moved it to 50 stocks on Friday. But I'll be honest with you, I just looked at some of the stocks they restricted. It really is probably for your best interest. One of them is CTRM. It's Castor Maritime. This was a 40-cent stock. And the reason why I say this, they ran it up to 80 cents. Pretty nice, double your money in one day. But if you look at the very top under their name, it says NASDAQ deficient user filed to meet NASDAQ continuing listing requirements. I've noticed this on multiple stocks. Express was below a buck. Anything below $5 is considered a penny stock, first of all. So this Castor, Maritime, Express when it was $1, they're all considered penny stocks. And once you get below a buck or two, I think it's $2, you have to raise more money in order to stay listed on NASDAQ, or they'll remove you. So people are jumping in and following these stocks. So I think Robinhood, they're probably doing themselves a favor, because people think, well, if I only pay 40 cents, what do I have to lose? Well, you lose 100%. Because if you buy it at 40 and it goes to 0, you lost 100%. So this thing is already going from 40 cents to 80, and then it finished at Friday at 60. So you're up 50% in 2 days, 100% for one day, 50% after two. So I really don't think that they are sympathizing, Robinhood that is. I don't think they're sympathizing. They literally have to have the money there. If they're allowing you to buy stock on margin or options, and then you trade it and dump it, and then trade again, well, they have to have the money to make that transaction in the back work. So you gotta keep that in mind. I know there's a lot of people out there that are mad and think that this may change some things, and it certainly is gonna make some people think twice about shorting stocks. So, okay, so now you have a decent understanding of why, in my opinion, I don't think Robinhood is sympathizing with hedge funds. I think it's simply a money issue. They raised $1 billion, I think, on Friday to keep things going, to offer people 1 share or 2 shares. But that's not gonna last long. But that's a lot of money. Okay, so number 2, I saw this weekend also, now they're talking about silver. There's some chatter on Reddit that, on Wall Street Bets, that silver is gonna be the next short squeeze. Silver is huge. I read an article where they're talking about JP Morgan. Some people are accusing JP Morgan of fixing the price of silver, that they control so much of the silver float that they can actually fix the price. So they're telling people, let's squeeze silver and squeeze JP Morgan and squeeze other people that, maybe they're not short, but they've been manipulating that, and they are sitting there short now trying to take advantage of this huge run-up in commodities at the beginning of the year. It was one of the hottest sectors, energy and commodity, for the first 2-3 weeks of the year. So keep that in mind. As fast as these things go up, they can come down. So I'm gonna be looking at these silver stocks closely. Matter of fact, I did pull up a couple here just to prepare if this thing takes off on Monday. There's a couple in here I looked at, and I'll just give you a couple symbols to look at. Silver's SLV, that's the biggest one out there. SLV, but if you look at the miners, usually when these things happen, miners take off a lot quicker. So you can look at some of the silver miners, but SLV is the easiest way to get in and out of silver. But I did look at the options, and there are some huge option plays way out. I saw like 29,000 contracts. Here's silver, that's 26 bucks, 58,000 shares. Keeping in mind, each contract's worth 100 shares. So you're talking like $6 million bets that silver is gonna go up. So there's 3 times there's at least 4 or 5 times as many people thinking silver is going to go up between now and the 19th, which is the next options expiration on the weeklies. So keep an eye on silver, SLV. If they start running that thing up on Monday morning, you'll know why. So, okay, so hopefully you got a little bit from that. Please like and subscribe, and then also have a course down below if you want to learn more in depth about this, so how to trade these things. I've got a course down below where you can learn about budgeting, investments, retiring. Check out the link. And until next time, take care.